Well, hello, traders and investors. I'm LA Little, and this is your daily NeoTA wrap. Take a look at these markets, doing it from a neoclassical perspective. And it means we're looking at supply and demand on the charts, and we're using that to make decisions about what's going to happen next. You know, the market is a series of tests, constantly, over and over, every day, every second, every millisecond, right? On a weekly chart, a daily chart, intraday chart, doesn't matter. Price discovery is about determining, those tests. If you can't take it up, you'll try to take it down. If you can't take it down, you try to take it up. And you keep doing that until one side or the other gives up and the price bumps up to another level. That's supply and demand. That's how it happens, right? And if you look at that supply and demand, you can actually make pretty good decisions. You see me make calls here on a constant basis telling you that stuff. I'm not, I don't have a crystal ball. I just look at the charts. I just look at where supply and demand is. And then I see how that test takes place. That's how we made the call Friday that we should go up this week. It's the way it is, folks. And, anybody that does anything else, they're doing their best, right? But you want a probability-based system that has known probabilities that you can trade against. And, neoclassical is all about that. Let's get to the charts here. Actually, let's get to the numbers first and see what we got. So I'm going to start with the S&P. Actually, let's do the numbers. So what do we got here? We were up day again today, but we're running out of steam up here. But, it's pretty amazing. Again, probability-based, odds were that we wouldn't be able to get the new highs and hold them and extend, right? I said, my thing was, and I'll show it on the charts when we get there, is that, we could get up and test those highs, but my guess is that we're probably going to fail. Their probabilities favor it right now. At the same time, we have a very bullish market, and that bullish market can move higher. So, if you're going to lean one way or the other, you got to lean in the direction of a trend. That's always the case. And that means that you're leaning long. You have no choice but to lean long. So anyway, that's the way it is. Gold down, silver down, oil down slightly, bonds down. Dollar actually was up again today. If we look at the indexes, they were up. Nothing big, but up. We did get a pretty good push in the Russell, up 1%. It made new highs and closed at new highs today. We'll look at that chart. If we look overseas, they did all right as well. One place I want to call your attention to, and we're going to look at this more closely, is in Europe. Big moves in Europe, breaking out on the CACs, right? And you have the potential for a breakout on the DAX. And if you look at it, what's driving it? Same thing that's driving it here, people. Financials, right? The financials are on fire. And they're on fire in Europe. We'll look at a chart there as well. It is where I'm overweight in Switzerland right now. I may have mentioned that last night. I do believe that is the place to be. Folks, when they give you money, you got to take it. It comes in scoops. It goes away the same way. When things are working, you got to stretch it. You got to make your money while you can. Let's go back here, look at the charts. We'll start with the S&P. Okay, so here we are coming up to test that high. Now, this high has volume on it. You're coming up with nothing comparatively, right? And that's true across it. But you know what? Don't get fooled on volume. If this breaks over this and keeps going, it doesn't matter, right? It will only matter if it fails. And so you got this little high up here it's going after. That high is just slightly higher, 22,114. We're sitting at 22,12. So we're going to attack it tomorrow, try to break it down. If we get over it, that says that we can push higher. And so if that's the case, then you definitely want to continue to lean long. Now, if we look at the other indexes, I'm going to roll over to the Russell first. We had two indexes that we talked about we should watch today to see what they did. One was the Russell, and the question was, could it get over? Well, first of all, could it get over these? And it got right to them last night, and it held just barely over them. We said, okay, can it hold another day? Well, not only did it hold, it blew right over the highs. And financials are driving this baby as well today. If you look at KRE, KBE, any of those. So the Russell makes a new high, makes it on less volume, and holds it. Again, tomorrow the test will be the retrace back into this if it takes place. More than likely you'll see that. If it holds that, then the bounce back up again, right? You have a massive ABCD structure, an unbelievable one that I can't believe is actually going to extend and fulfill anytime soon. If this thing were to actually fulfill, folks, we're talking about 32% off the bottoms. That would be a move unparalleled almost, right? I mean, we've seen stuff like that before, like, in the late 90s, for example, but that's not common stuff. Anyway, over the highs, looks like it wants to go higher. The other one that we talked about was the NASDAQ, and the NASDAQ was coming into what should have been, and this is our laggard, coming into what should have been resistance right there, couldn't hold it down. Gets over it. Again, tomorrow, can it stay over this? If it can, look for it to trade higher and go to the next one. That's the way these markets work. Not what I would expect, but then again, this market is not doing what most people expect, and it's starting to make people pay up. If you think about it this way, and I'm going to go back to the Russell chart. If you're not in the Russell, and you're coming into the end of the year and you're trailing the indexes in terms of their performance, what are you going to do? You're going to sit here and just watch this thing go? No, you're going to pay up and you're going to drive this price higher if that's what happens. Performance anxiety can move a market. Yeah, it will come back on itself at some point, but in the meantime, this thing can drive. I mean, remember we were talking about a week and a half ago, 2 weeks ago, we were talking about the shipping stocks. I don't know if you remember those, but one of the ones we looked at was dry goods, right? And we had that, I mean, this was 4 days, went from 475 to a high of 102. And then, and I told you at the time, matter of fact, I told you on one of these two bars, that this thing would be back within a week or two. Because it was performance anxiety chasing hot stocks. It was nothing but momentum. Right back to where it started after a fantastic move, if one could trade that. Same thing can happen even to an index, not on this extent, but certainly it can move higher. INDX now is the only, this is the main laggard. This is big cap tech, biotech, and chips mainly. This one's coming back up to test its breakdown, or actually its anchored zone resistance. Anchored zones, wide price spread, heavy volume, that's what you have on these. That should be difficult resistance on the way up. We saw it cut through it just a second ago on the NASDAQ. If it does it here on the NDX, we're going back to highs, not on this, but on the others, certainly on the S&P and potentially on the NASDAQ, while this one tries to pull back up towards the highs. That's our indexes. I want to show you Europe. And the reason I want to pop over there is Europe is starting to break out. And this is based on banking stocks primarily. I mean, everything's moving, but the banking sector is what's moving it in Europe. I want to pull your attention to France, and even though I don't have the numbers in terms of volumes tonight, you got a breakout over a swing point high, and if you pull this over and take a look at it on the weekly, you got breakouts happening on the weekly as well. That's multiple swing points, multiple time frames on something that has consolidated for 8 months. Right, on this weekly chart, it's 8 months of consolidation here. If this holds, this could be a fairly large extension to the upside in Europe. And that on the back of what happened in Italy, right, where everybody thought that there's no way, that this thing could do the same thing again. But what does it do? It does exactly the same thing. And that is that you get another political event and they buy it. And if I look at like the ETF for Italy, EWI, look at this run right off of it. They gamed it in front of it and then they just took it off. And then today it just blew higher, 4%. This thing is down like 20 or 30% on the year. This thing's coming back heavy. and hard. Here's the weekly on it just to give you a feel. But the one I really want to show you is what I was just talking about with the financials. EUFN is a good financial proxy for Europe banks. Breaks over a swing point high, volume expands, 4.5 million shares trade, up 3.26% today. If you look at it, it's going after the weeklies as well. That's what's driving Europe. ECB comes out on Thursday. Clearly the expectation is that they're going to backstop and they're going to buy more debt, and they're going to allow these stocks to continue to levitate. Had a member asking me some questions about stocks, primarily stocks that were in the tech sector. Now, the tech sector is the one that's struggling. And that doesn't mean that stocks in that sector can't go up. What it does mean, though, if you look at the trading cube, right, is you have weakness for the most part. You have weakness in the XLK. Now, mind you, they're all bullish, but you know, from a sector perspective, this has been one of the weaker sectors since the Trump victory. And so, even though you can get stocks moving against it, this acts up or ends up acting as a gating factor for those to move up. And if anything goes wrong with a stock in this sector, it's going to get beat up pretty bad. And so, you know, the reward to risk is not as good as elsewhere. And so though you can play these and still make money, they're going to be harder, I should say, to make money than you could elsewhere. Black box looking pretty good. Look at it on the weekly, up at a swing point high breakout. Yeah, it's not a bad looking stock. But then you can go to another one like this one, SNCR, Syncross. These guys, I don't know what it was today. Volume expands. They blow right back down to where they broke out from, hit it with more volume. This one's a dead duck now. In that sector, this one is going to flip around, go sideways tonight, potentially even go fill all this gap, down to where it broke out from. So all I'm trying to say is if you're going to play individual stocks, try to stay in those sectors where they're the strongest. And you could look in any of the, if you just go here, let's just go to the financials. I'll give you one example. Let me go to the sectors, and I'll pop into XLF. Now look at XLF and look how strong this is. I mean, there's nothing but strength here, right? Just day after day pushing up. Go look at any stock inside this that has especially any weighting. BAC, for example. Even Wells Fargo, who was totally beaten up. Wells Fargo was left for dead about 2 weeks ago. Look at it. It's in the right sector, right? It just gets pulled up with everything else. That's what sector strength will do for you. You got three things that drive the stocks, right? You got the stock itself, you've got the sector that it's in, and you have the general market that it's in. And that overlap is there. In other words, these things, the general market, the sectors, they have an effect on the stock. The stock doesn't trade in a vacuum. And so be aware of that when you're trying to figure out where you want to put your money. I'm going to leave it at that tonight. Tomorrow, I'm going to test those highs on the S&P. If the S&P gets over it and holds it, Russell holds it, you're going to see more performance anxiety build up and press these markets even higher. Have a great night. I'll see you next time. Good night.